And we are live. Good evening, everyone. Tonight we will be discussing fractional reserve banking. Recently, the Federal Reserve announced that they would be slashing the reserve requirement down from 10% to 0%. Many of you are asking yourself right now, what exactly is fractional reserve banking? How does this affect me? And what's going on? Prior to the cut, fractional reserve banking worked like this. If you deposited $100 into your bank account, that bank or your bank could take $90 of your deposit and actually lend it out to other people. So essentially, they could take your money and lend it out without you even knowing it. And all they had to do was maintain $10 of your original deposit. Now, because of what's happening in the economy, the Fed has slashed the reserve requirement from 10% down to 0%. So now your bank can take your entire deposit and lend it out. So I'm going to walk you through how this is inflationary, who does this benefit, and who does this actually harm. As you come into the live stream, please like this video. Share this video. If you're not subscribed, please subscribe and hit the notification bell. Join my mailing list in the description below, so therefore you would be notified every single time I am going live or if I'm uploading a video. If you want to contact me or you want to have a conversation with me, simply follow me on Instagram. A link to my Instagram page is in the description below as well. And if you want to support the stream financially, a link to both my PayPal and Cash App is in the description below. With that being said, let's get straight to the live stream. One thing about me, I pride myself in not being a conspiracy theorist. I love to give you information that is factual, that you can go and you can verify this information yourself. Because we're living in a time where there are going to be a lot of people who are going to try to use what's happening in the economy to promote a lot of crazy conspiracy theories. I don't participate in that. I'm giving you straight government information that you can go and verify yourself. Right here it says the Board of Governors of the Federal Reserve System. This is the federalreserve.gov, and this is a recent press release that they've put out recently. So let me give it to you now. I'll put that in the chat so you can go and verify this yourself. So now scroll down. It says press release March 15th, 2020. Federal Reserve actions to support the flow of credit to households and businesses. And if you come down here, it says reserve requirements. It says for many years, reserve requirements played a central role in the implementation of monetary policy by creating a stable demand for reserves. In January 2019, the FOMC, announced its intention to implement monetary policy in an ample reserve regime. Reserve requirements do not play a significant role in the operating framework. Here's the key part right here. In light of the shift to an ample reserve regime, the board has reduced reserve requirement ratios to 0% effective on March 26. I'm going to read it for you one more time, and then I'm going to explain to you how this works. In light of the shift to ample reserve regime, the board has reduced reserve requirement ratios to 0% effective on March 26th. So this is not me making this up. I'm not promoting some crazy conspiracy theory. Yes, your bank can take your money and create loans out of thin air with your money. And that's because most of the money, as I've been telling you before, it stays in the financial economy. And it's really just a matter of one bank sending money to the other bank and just debiting and crediting each other's ledger. So now let's flip to the iPad and let's walk through this right now. So you go to your bank, and I've shown you this before, but today we're really going to dive into this and go a little bit deeper. You go over to your bank and you make a $100 deposit. Let's say your bank is Chase Bank. So you go to your bank and you make a one second, let's put the highlighter on. You make a $100 deposit. Put your money in your bank. What your bank does, now this is going off of a 20% reserve requirement. Remember, I just told you they slashed it down to zero. So $80 of your money, that's 80%, is going to be loaned out, and 20% is going to be held on hand. And that's because banks understand that most people don't come withdraw their money. And as I said before, most of the money stays in the financial economy. So you deposit your $100 in the bank. The bank says, hey, Alice doesn't come often and withdraw her money. So this is legal now. They only have to hold $20 on hand in case you want to come get your money. And they are able to legally lend out $80 of your money. Now remember, this is going off of a 20% reserve requirement. They just slashed it to zero. So follow me. So now that loan goes to Bob. So Alice made a deposit of $100. The bank holds $20 on hand. Bob goes into the bank and gets an $80 loan. He wants to go buy a car. He wants to go buy a house, whatever the case may be. That $80 then ends up in another banking institution's ledger, right? So that $80 ends up at, let's say, Wells Fargo. So now Wells Fargo says, hey, let's say this is Jason's deposit, the $80 that puts it in there. Jason doesn't come take his money out too often. So we're going to hold $16 and we're going to lend out $64. And then that $64 ends up on, let's say, it ends up in some type of a money market, right? A different institution. It may not be a bank. It could be some type of a money market or an investment account. It could be Geico's ledger. It could be AT&T's ledger, but it's still a deposit. But this deposit of $64 ends up in another banking institution. And that bank does the same thing. It takes 20% of $64, it holds it as a reserve, and it lends out $51. Now understand, this keeps happening over and over again because money is moving around the economy. People are debiting and crediting each other's accounts. So money may end up in Chase. It may end up at Bank of America. It may end up at Wells Fargo. But you notice they keep taking people's deposits, holding the reserve amount, which is only 20%, and then lending out 80% over here. Now, this is what is known as the boom and bust cycle. When these loans are going out over here, this is when the economy is doing well. People are getting auto loans. People are getting credit cards. People are getting mortgages. And they're just simply loaning out money. But understand, they're using that initial $100. Now, when you take a step back and let's erase all of this, let's really analyze this on a deeper level. Let's erase all of this stuff off of here. The total amount of actual real physical money that actually exists, the initial deposit, is only $100. I keep doing that. Let's go back to the pen. It's only $100. So when it says reserves held, there's only really $100 in the banking system. But because they can literally print money out of your money, they can grow the money supply, which is known as inflation. They were able to create $346.31 of new money, of loans, out of thin air with your money. But remember, you started with only $100. So now the money supply, because of all of the credit that was given out, all of the debt that was created, you have a total of $446.31 because you're combining the reserves plus the $346. Understand that if you and I did this, we would go to jail. This is literally legal counterfeiting. I know it's hard for you to wrap your mind around it, but understand this is legal. And to prove it to you, I'm going to go back now and I'm going to read what's on the Federal Reserve's website. It says the reserve requirements. In light of the shift to ample reserves regime, the board has reduced reserve requirement ratios to 0% effective on March 26th. So I'm not promoting a crazy conspiracy theory. I am giving you a fact. They are able to literally take your money and create money out of thin air. Now understand, we did this with a $100 example. Now you have to start thinking about the fact that this is done in literally the trillions upon trillions upon trillions of dollars. Understand that each one of these loans that are originated over here, the bank is earning fees and interest off of originating those loans. And then every single month, whether it's a mortgage or a car payment, they're making interest off of that money. This is money that was created out of thin air. This is how they used your money to do this. Now, most people think that banks operate to basically hold your money. But in reality, your deposit is actually a liability for most banks. And I'm going to show you that right now. Let's flip over to that. So, as I've said to you guys before, when you start really analyzing the system and you start asking yourself some important questions, some detailed questions, you start asking yourself, why does this keep happening where the economy grows and the economy contracts? And thank you for the donation, Remo Bilmo. Why does it's known as the boom and bust cycle, where you get asset inflation, real estate goes up, stocks go up, but Main Street doesn't really get the benefit. And I'm going to get to that in a second. But most of the money, it stays in the financial economy. So when you go and you deposit $100, that $100 that you deposit ends up on the liability side for a bank, because they actually have to give you back that $100. So when they go and they create that loan, now remember, I did it off of a 20% reserve requirement. They just slashed it to 0. So now, when you deposit that $100 in your bank account, your bank can then take that entire 100 and shift it by creating loans. They can go and shift that entire $100 over here and make it an asset. Because what the Fed is saying, they want to jumpstart the economy in theory. The problem is that $100 doesn't go into investing into something that's actually productive, that's going to really make the economy more beneficial. It doesn't go into Main Street hands. It goes into Wall Street's hands. So Wall Street can do more speculation. So banks don't really like your deposits. But what happens is, as I've said to you before, they want to use your money to originate as much new debt as they can, because the only way the economy can grow is by getting people to go into debt. If you don't go into debt, the economy cannot grow. Which is why I said to you, debt is money. Without debt, there is no growth. So now they make fees off of originating that mortgage, that loan. They make interest off of that loan on a monthly basis. And because, as I've said to you before, let's bring this back, because most of our payments, our entire society is based upon, digital payments, the internet. Most people make mobile online payments. So all that's really happening is one bank is crediting another bank's ledger and debiting their ledger. And this gets into cryptocurrency. This gets into Bitcoin. This gets into the digital dollar that was recently announced. And we're going to get to that in a second. So essentially, all that happens is, let's say that you have money over here. So let's erase this. Let's erase this $100, right? Let's say that you have, or this bank has $100 over here of your money, and you want to pay your car insurance, right? Your car insurance is held with Geico, and Geico is banking with Bank of America. All they simply do is update their digital ledger. So they just simply debit your account $100 and send $100 over here to Bank B. That's it. And this is why they're not worried about, when you flip back over here, they're not worried about you coming and withdrawing your money, because most of the things you do is online. Most people don't really deal in physical cash. So when you come back over here to the example that I've given you, and you erase all of this off the screen, give me 1 second, they can play this game with your money with these reserves, because they know many of you, or most of you, you're not going to come actually physically withdraw that money. And if you did, that would be known as a bank run, a run on a bank. But because, again, as I said, everything that we do is digital, they're just simply crediting and debiting each other's ledger, which is basically just a bunch of ones and zeros on a server, right? It's technology. But they're getting all of the benefits, right? They're getting the fees because, remember, they even have a bank account. They charge you swipe fees. You just don't understand it. But every time you swipe your debit card, there's a 35-cent fee built into that swipe. So now think about this. Your bank gets 35 cents, and some swipe fees are higher, some are lower. I'm just going to go with 35 cents. It's built into the transaction, so you don't even know it. But every time you swipe your card, 35 cents of that transaction on average goes to the banks. So now your bank is 35 cents and this bank is 35 cents. If you're wiring money, you got to pay a $30 to $35 fee. If you have a checking account and you don't have a certain amount of money in there. So these banks are literally robbing us blind. They're getting swipe fees. They're getting checking account fees. If you use the wrong ATM, they'll charge you $3 because you bank with Chase, but you went to a regular ATM. Literally, they're hitting you from every side of it. And this is how our economy has been structured, where now we get to, as I was saying before, the boom and bust cycle. Because when you take a step back and you say to yourself, if they can create all of this money out of thin air, and we just seen the Fed announce that they're basically doing a $6 trillion stimulus package. $2.2 trillion is supposed to go to Main Street. $4 trillion is supposed to go to Wall Street. Literally, they printed $6 trillion. The problem is that our economy is structured in a way where it doesn't encourage savings. It doesn't encourage investment. Instead, it encourages debt and consumption. And this goes back to, there's two schools of economic thought. You have Austrian economics. Those are the hard money people, the Peter Schiffs of the world, right? When you take a step back, they believe that you should be saving money, saving rates should be high, and you should be investing in productivity. And then you have Keynesians. Keynes believed that all consumption is good. So even if you're going into debt to consume, just keep going into more debt. This is why we keep getting these bailouts. The only thing is that the bailouts keep getting bigger and bigger and bigger, because when a bust happens, you have to originate more debt to keep more consumption going. And over 75% of our economy is based off of consuming. We don't really focus on manufacturing and producing things. So when Trump is saying the economy is well because the stock market is up, that's the financial economy. That's not the real economy. See, the real economy, you're stuck with debt. In the real economy, they give you auto loans, right? In the real economy, they give you student loans. In the real economy, you get credit card loans. You get things that are actually taking money from you. And you're borrowing. When you go into debt, a lot of people don't understand this. Debt is you basically borrowing future production for the present consumption. Let me say that for you again. When you go into debt, you are borrowing your future productivity. You're borrowing the future for present consumption. But you're sacrificing your time, your most valuable asset, for debt that's being created out of thin air. And then in the financial economy here, where Wall Street plays, they're getting their money and they're putting their money into things that are appreciating faster than inflation, right? So they get what is known as the good debt. So they get into real estate, right? But they get into real estate that's cash flowing. They put their money into corporate bonds that are paying them an 8%, 7% coupon, right? This is the financial economy. Then they're doing, corporations are doing stock buybacks. Well, if the stock performs a certain type of well, the CEO gets a benefit. It gets a bonus. So the incentives of our economy are structured the wrong way. And this is why I made the circle where here, the big circle is the financial economy. But then you start looking at the real economy. This is the real economy. It's shrinking. It's contracting. We've been in a manufacturing recession for most of Trump's presidency, right? We're not growing. We're not making things. We're not producing things. See, inflation isn't bad when you're actually growing the economy, when you're producing things, when things are moving and growing. That's not bad, because as the population grows, as you become more productive as a society, it doesn't matter about creating inflation. But going back to the fractional reserve banking, remember, this money, this bad debt that you're getting is being created out of thin air. They're literally feeding off of your future productivity. And because, again, most people don't understand debt, they just go and they just sign it away. And our society is structured where it encourages you to go into debt. It encourages you to borrow all the time because we live in a highly leveraged economy. So now when we have an economic downturn like this, you see how quick the economy, how fragile the economy is? Because it's not built on anything sound. It's built off of debt. So it's so easy for, when you start thinking about, let's erase this, when you really start thinking about these loans, and how these loans are being created just off of $100. And once people start losing their jobs and they can't pay these loans, right? Well, these banks, they're depending on you to have to pay those loans back. That's how they make their money, right? So this is known as deflation, but it's asset deflation. It's not deflation where like actually your dollar is buying more, right? It's just asset prices are going down, but the value of your money actually loses money. So this is how the economy collapses so easy. Now, when you're creating this, I'm going to flip it over now. This is known as the multiplier effect. What is the multiplier effect? The multiplier effect refers to the proportion amount of increase in financial income that results from an injection of spending. Alternatively, a multiplier effect can also work in reverse, showing a proportional decrease in income when spending falls. Generally, economists are usually the most interested in how capital infusions positively affect income. Most economists believe that capital infusions of any kind, whether it be at government or corporate level, will have a broad snowball effect on various spending aspects of economic activity. So again, they just want you spending money. The problem is that your income isn't growing as fast as your debt is growing. So this becomes the problem because all of the income gains is in the financial economy and it doesn't make it into the real economy. And this goes back to Keynesian economics versus Austrian economics. The problem is most people go to school and they become indoctrinated in Keynesian economics where they just want to spend. And we get these credit cycles known as the boom, and then we get the bust. The problem is the bust usually falls on you, the taxpayer. You didn't get any of the gains, or you got a small percentage of the gains. Wall Street and the financial economy got all of the gains, and they leave you stuck with the bubble. Now, when I was just recently speaking to you about the digital ledgers, when they were passing the stimulus package that recently passed, they were talking about introducing what is known as the digital dollar. And a lot of you were asking me my opinion. See, this goes back to cryptocurrency. Whether you believe in crypto or not, the future is going to be in blockchain technology and digital currencies. Over 97% of the actual money in the world is digital. As I just shown you, I was able to show you inside of the ledgers, it's just about debiting and crediting each other's ledger. The problem with this system is that it's highly predatory and it's centralized. And we need to be moving away from centralization and into more of a decentralized economy where you and I have more control and more say over not just what's happening with our money, but what's actually happening in the economy. Because now, start thinking about this. If the Fed can create, let's say, the Fed coin, or Facebook can create Libra, could you imagine the type of control and power that they would have? I want you to start thinking about how YouTube just bans people and deplatforms them. Think about how Facebook can say that what you're saying is hate speech. So now start thinking if the government was able to issue digital money, whether it was a cashless society, because a cashless society is coming. What type of cashless society do you want to live in? Do you want to live in a cashless society where money can be printed out of thin air, where you can be turned off because of hate speech? They can literally close your account. And if there's no cash, you can't go in the store and buy anything. They can literally erase you. Let's say you're part of the wrong political affiliation. Let's say that you're some type of an activist. The Fed can literally say the government can just turn you off. Do you want them to have that much control over you as an individual? Think about companies like Facebook. Do you want them being able to have all of your information as far as what you buy, how much you spend, where you spend it at? Or do you want to be a part of a decentralized currency that actually gives you power, that's synonymous, that creates a level of privacy, that's based upon sound economics, that you can't just print more of it, that you actually have to expend something to get it, right? Currency allows you to transact, but money, the least that money should do is be able to hold its value or actually preserve its value over time or even appreciate over time. So now I want to play something for you real quick, because this guy's basically going to say what I just recently said. Give me 1 second.
So children being born today will not use paper or metal money. We have to think about what kind of cashless society do you want to live? So children being born today will not use paper or metal money. We have to think about what kind of cashless society do you want to live in? Do you want your children to live in? Think about when you buy something from a corner store with cash. The merchant does not know your name, your address, what the last thing you bought, maybe what you're most likely to buy next. And you know what? They didn't need to know any of that. That was fine. But now this is being taken away from us by corporations and governments who insist that for our security, they need to know everything about us. I think this is nonsense, and I think we need to fight back. And thankfully, about a decade ago, some group of people came up with a way out. If you look at the evolution of money from when we used to have a barter system through shells, through precious metals stamped with king's faces on them, to paper money, and now to credit cards and mobile payments, someone created another way to have a money system without a central authority, and that is Bitcoin. If we think about the way digital payments work today, and again, all payments will be digital, there's a third party in the middle, whether it's Visa, Venmo, PayPal, WeChat. Someone in the middle can freeze your transaction, confiscate your funds, surveil and spy on you. With Bitcoin, your transaction is completely peer-to-peer. The payment processing is done by a decentralized global competition and not by an entity. This is a revolutionary step in human history.
I'm going to play that for you one more time, but I want to preference something for you. Right now, we have a choice. We can continue as a society to keep going down this path of inflation. We can keep going down this path of centralization, or we can start trying to build other systems. I am not telling you that Bitcoin is going to be the only cryptocurrency or the only one that you should be focused on. I'm trying to get you to start thinking and understanding what's around you, because when you're living day to day, it's sort of like, I don't know if you've heard of the analogy about boiling a frog or cooking a frog. If you wanted to cook the frog, you can't just boil the water extremely hot and throw the frog in, because he's responsive. He would immediately jump out of the hot water. But if you put the frog in the pot and you slowly turn on the fire, he will actually enjoy his demise because it would be soothing at first and he wouldn't even know that he was being cooked alive. And that's what's happening to us as Americans. Our freedoms are slowly being eroded away. It's the same thing with inflation. I tell you guys this all the time. When you're only getting 3% inflation and 2% inflation, you don't really feel it until you wake up one day and you say, wait, when I was a kid, I can go to the store with $1. And with $1, I could buy so many different things. And then now I go into the store and I barely can get a Snicker bar for $1. And depending on where you live, it's going to determine how much money, how much purchasing power you have. If you live in San Francisco or you live in a place like New York City, the inflation rate is much higher than if you lived in a place like, let's say, Virginia or Tennessee. So you begin to wake up one day and you realize you can't afford anything. You're still getting paid dollars. The problem is your dollars just don't go as far as it used to go. And that's known as inflation. You've lost purchasing power. And again, it happens over time. It's a slow creep. It's not something that happens overnight. And then this is how we end up where the bailouts aren't 1.5 billion. They aren't 20 billion. Now we're talking about trillion, 6 trillion here, 4 trillion there. And it's only going to keep happening bigger and bigger and bigger. And you may think that the economy is being rescued, but this 10-year boom, most Americans did not get any of those gains. And you can't talk about your 401k because that was wiped out in a matter of 2 weeks. So when people were talking about Trump and the economy, no. Your stock portfolio isn't indicative of how successful or well the economy is doing when most of it's being driven by stock buyback. So let's play this video again.
So children being born today will not use paper or metal money. We have to think about what kind of cashless society do you want to live in? Do you want your children to live in? Think about when you buy something from a corner store with cash. The merchant does not know your name, your address, what the last thing you bought, maybe what you're most likely to buy next. And you know what? They didn't need to know any of that. That was fine. But now this is being taken away from us by corporations and governments who insist that for our security, they need to know everything about us. I think this is nonsense, and I think we need to fight back. And thankfully, about a decade ago, some group of people came up with a way out. If you look at the evolution of money from when we used to have a barter system through shells, through precious metals stamped with king's faces on them, to paper money, and now to credit cards and mobile payments, someone created another way to have a money system without a central authority, and that is Bitcoin. We think about the way digital payments work today, and again, all payments will be digital. There's a third party in the middle, whether it's Visa, Venmo, PayPal, WeChat. Someone in the middle can freeze your transaction, confiscate your funds, surveil and spy on you. With Bitcoin, your transaction is completely peer-to-peer. The payment processing is done by a decentralized global competition and not by an entity. This is a revolutionary step in human history.
So now, let's start talking about this digital dollar because, as I said before, a cashless society is coming. It's just a matter of which type of cashless society you want to live in. And I would say we're already in a cashless society. It says CFTC Chief's Digital Dollar Initiative adds 22 new advisors, will release white paper in the next 2 months. Giancarlo, the former chairman of the Commodity Futures Exchange Commission, first created the Digital Dollar Foundation in January 2010. Think about this. This is how deliberate these people are. And things don't happen overnight. They've been planning this for a very, very long time. Understand that. The goal, according to a previous announcement, is to advocate for a creation of a portable digital dollar that can be sent as easily as a text. And we already have that with Bitcoin, but I'll get to that later. Notably, the U.S. Congress recently contemplated using a digital dollar to offer Americans stimulus payments, although the provision was later stripped from the economic stimulus bill. Giancarlo believes it was still an encouraging development. A separate bill advanced by the House Financial Services Committee retains the digital dollar language. and Ohio Senator Sherrod Brown has put forward a digital dollar measure as a standalone bill in the U.S. Senate. Guys, I tell you this all the time. It's known as problem, reaction, solution. They already have this planned out. They're just waiting for whatever crisis comes to then try to strip away more of your freedoms and more of your rights. We've been hearing about this one world currency, one world government for a very long time. And this isn't a conspiracy anymore. I mean, you've had George Bush and you have Obama, a Republican and a Democrat, come out and state about a new world order. I don't participate in conspiracy theory. I come and I give you fact. Now, you can choose to hide and run from this, or you can choose to face this head on. You have a choice. You can do things the old way, or you can be informed and start doing things the new way. The Overton window opens for a digital dollar. The legislation comes about as U.S. officials I just read that already. Yeah, let me read this again. Look for ways to get much needed cash into American pockets. According to a Senate bill, using a central bank digital currency, CBDC, the federal government could send direct payments to citizens' wallets held by the Federal Reserve called Fed wallets. This is not the last we'll see of the digital dollar movement. Lawson Baker, founder of Relay Zero, a cryptocurrency investment and advisory firm, said in direct message, "The dollar is the United States' greatest export because we export our inflation." That's another thing that people don't understand, why we don't really experience a lot of our inflation. And that's because we are the reserve currency. So for other countries to actually conduct and do business, they have to convert their currency. Like, for example, the petrodollar, they have to convert their currency into US dollars, which allows us to export our inflation to other countries. And that's a subject for a later video. But understand that we export our dollar. We export our inflation. Let me read that again. The dollar is the United States' greatest export, and any technologist or financier would want to be a part of its next phase of existence, Baker said. Favors, pork, you name it. Everyone wants into the digitization of the dollar payday. Whether introduced out of sheer desperation, as a genuine attempt to utilize instantaneous and transparent payment technologies, or as bill padding, as Maddie Greenspan, a digital asset researcher, wrote, and the CBDCs are rising up the mainstream agenda. Cooley wrote an op-ed last weekend urging Congress to consider blockchain-based stablecoins as a way to pay out a direct stimulus. It would save money and reduce contagion risks, she argued. However, the current drafts make no mention of a digital dollar being maintained on a decentralized ledger. I'll read that to you again. There's decentralization. That's peer-to-peer, no middleman. Then there's centralization, where you give your money to a bank, they take a fee, they tell you how much you can send, when you can send, they then take your money, they do fractional reserve banking, and then they send it to another bank that takes their fee. That's centralization. You have a choice between decentralization or centralization. I'm not going to say I prefer one way or the other as long as we're rapidly moving towards this solution, Cooley said. Any progress on this matter is a win for everyone. The faster we can get funds into the hands of those that need financial support at this time is crucial. China's already onto it, right? China has almost 2 billion people on their continent. It says in their country. China to test digital currency. Could it end up challenging the dollar globally? And let me put this in there because this is big, right? I think there's 1.7 billion people in China, if I'm not mistaken, in the country of China. Paste. Put that in there for you so you can go and read that. It says China is light years ahead of the United States and doing away with old-fashioned paper money. Now China's central bank is preparing to test a digital currency, and some observers say it could mark the beginning of a new economic arms race, challenging the supremacy of the US dollar. Already, hundreds of millions of consumers in China have grown used to paying for purchases without cash using popular smartphone apps such as WeChat and Alipay. It's already here. Many of you use Cash App. Many of you use PayPal, and you don't think twice of it. You just use it, but you don't understand at any moment Cash App can shut you down. At any moment, PayPal can shut you down. And for those of you who you're running a business and you've used PayPal, I'm pretty sure that you've had the experience where they've frozen your accounts before and actually locked down your funds. It's happened to me, and they can hold your money for up to a year. Also, people can do chargebacks when they can buy your product or service and they can do a chargeback. With Bitcoin, you can't do that, and we'll get to that in a second. Everything is immensely convenient in China, said Martin. I'm not even going to butcher his name. A research fellow at the Peterson Institute for International Economics. You pretty much only need these two apps to do just about anything. You walk into a restaurant, scan a code, and order your food. You don't have to wait for a waiter. All payments are automatic. It's quite extraordinary. I want you to think about this now. You ever heard the saying, the road to hell was paved with good intentions? They sell you the idea, oh, it's so convenient. You just walk in there and you just pay. What is that going to do to jobs? See, you have to be a three-dimensional thinker. You have to start thinking a few steps ahead. It's like playing chess. You can't think about the first move. You have to think about the second, third, fourth, fifth move. Technology is extremely deflationary. Technology kills jobs. Innovation kills jobs. It may make us more efficient, but it may have a net positive in some places, but then it has a net negative in other places. So now you are going to lose a lot of your freedom because now China's a communist country. And America says that they believe in freedom, but once you start going into the Patriot Act and the Bank Secrecy Acts, you really have no privacy. When you start looking at Amazon, when you start looking at PayPal, a lot of these corporations, Google, they monitor everything you do, where you spend your money at, and they put it in databases. The search engine knows more about you than you probably know about yourself. So now at a certain point, you have to start asking yourself, do you value your privacy? Do you value protecting who you are, having a level of distance between who you are and what people know about you? It says the digital yuan is expected to function more like its paper cousin than a cryptocurrency such as Bitcoin. I want to read that to you again because, see, Bitcoin is decentralized. It's not anonymous, it's pseudonymous, right? Pseudonymous, meaning that there's a layer of privacy there where they don't know who is behind that public address. Now, there are ways that they can track you, and we'll get to that in a second because I know there's going to be some troll that's going to say, oh, well, they can track you, yeah, through the fiat gateways. But that's because, I'm not going to get to that right now. So it says the digital yuan is expected to function more like its paper cousin than a cryptocurrency such as Bitcoin. Its value is tied to the regular yuan, so is expected to be relatively stable. And the central bank will be able to monitor every transaction so it won't have the anonymity. It won't have Bitcoin's anonymity. Think about that. It's telling you. And the central bank will be able to monitor every transaction. You will have no privacy whatsoever. If any of these government-backed stable coins, cryptocurrencies ever become the lay of the land, you will have no privacy. George Orwell's 1984 will be signed, sealed, and delivered. Now it says Libra. This was Facebook when they were trying to launch their stablecoin. Libra raises a lot of serious concerns, and those include around privacy, money laundering, consumer protection, and financial stability. Federal Reserve Chair Jerome Powell told lawmakers last July. Those are going to need to be thoroughly and publicly addressed and elevated before this proceeds. So again, guys, we're coming to a cashless society. Now, I want to flip from a centralized perspective to a decentralized perspective. It says, Lebanese Bitcoiners show how to talk about crypto at Thanksgiving. It says, in the face of strict banking limitations and a dollar shortage that have sparked widespread layoffs and protests in the Middle Eastern country, Bitcoin is helping some Lebanese get by. Emphasis on the word helping, because in times of civil unrest, traditional social ties can be just as important as technology. Amid an economic crisis, the Association of Banks in Lebanon has set a temporary $1,000 cap on weekly withdrawals from the US dollar accounts at commercial banks. Reuters reported earlier this month a Bitcoin trader in Beirut said his bank set an even lower $150 monthly limit for international spending. Chatter in Lebanese WhatsApp groups indicates many civilians are struggling to access their banks storing any currency. And see, when you understand that Bitcoin is permissionless and it's borderless, meaning all you have to do is download the Bitcoin software client, and now you're up and running. You don't have to submit any identification to use the Bitcoin wallet to run a full node. You don't have to reveal who you are. You can send money anywhere in the world as long as another person has a Bitcoin address. There's no middleman telling you what you can and cannot do. And again, you have to start thinking about how many people throughout the world are unbanked. See, many of you live in Western culture. You live in a Western civilization. We all have adequate banking. There's close to 2 billion people that don't have any banking services. They can't participate. They don't get to participate in the economy. With a cell phone, with a computer, you just download the app and you can participate. You can send money and receive money. That simple, with no third party intervening in that transaction. And I'll get to that in a second. Such restrictions create widespread ripple effects, since many Lebanese businessmen manage imports with dollars rather than the inflationary lira, because countries like Venezuela, countries like Lebanon, they have high inflation rates. So when people say, oh, Bitcoin, it could drop 20%. In some of these countries, they have 10 million% inflation. And I said that correctly, 10 million% inflation. I'm talking to you about a 3% inflation rate here. Could you imagine if your inflation is 10 million%? Where people are carrying around wheelbarrows of money? They have $1 trillion bills in Zimbabwe. Think about that, a $1 trillion bill. We have $100 bills here. They have $1 trillion bills in Zimbabwe. We are slowly running out of imported items and goods, said the Beirut trader, who, like others interviewed for this article, spoke on condition of anonymity for his personal safety. The local butcher didn't buy meat today because he can't increase lira prices because they have price controls. So he'll rather not get any, he said, sending photos of nearly empty supermarket shelves. In that context, remittances are a lifeline, including those sent in crypto. I believe Bitcoin is helpful, especially for expats looking to send money to help family in Lebanon. I've actually been getting a few calls about that today. Another Bitcoiner in Beirut said, nothing he helped up to 35 families do so this much, with each transaction worth more than $10,000 in Bitcoin. So now, right here in the United States, and this goes back to what I was saying before, there's 55 million unbanked people, and that's according to the Federal Reserve. There's 55 million unbanked people. They don't have access to banking. And I believe that the number is much higher. As I've just stated to you, you can go to bitcoin.org, run a full node, and just like that, you're operating. You download the Bitcoin software, client, and you can send transactions to anyone in the world. It's permissionless and borderless. And again, you got to start wrapping your mind around that this is a global opportunity. Globally. You can't just look at it from the speculative nature, right? Because Bitcoin going up in price, like Bitcoin doesn't have to go up in value for it to be successful. It's successful now. I can send money to you and you can send money to me. It's successful. Like Apple stock, if it goes up or goes down, doesn't determine whether or not the phone works. And you have to be able to think about that. Right here, it says, and again, this is from the worldbank.org. So let me put that in the chat because I believe in giving you guys the sources where I get this information from. Paste. I don't come here and give you any conspiracy theory. I give you things that you can go and verify and look up yourself. It says globally, about 1.7 billion adults remain unbanked. Without an account at a financial institution or through a mobile money provider, in 2014, that number was 2 billion. 2 billion. 2 billion people throughout the world don't have access to any banking. And I'm telling you that they can download an app and just like that, they have access to banking. They can send money. They can transact. They can buy goods and services. You can think about people who they may be an immigrant here in this country and they can send money. They don't have to go through Western Union or any third party that's going to charge them exorbitant fees and high fees. They can just simply skip that. This is the power of cryptocurrency, not just Bitcoin, but just crypto in general. No matter, I'm not here to talk to you about Ripple versus, Monero. That's for you to decide which cryptocurrency you want to go with. I'm a Bitcoin maximalist, and I dibble and dabble in other protocols like Tezos and like Ethereum. But again, that's a topic for a later video. Because account ownership is nearly universal in high income economies, virtually all unbanked adults live in developing economies. China and India, despite having relatively high account ownership, claim large shares of the global unbanked population because of their sheer size. Home to 225 million adults without an account, China has the world's largest unbanked population, followed by India, 190 million, Pakistan, 100 million, and Indonesia, 95 million. Indeed, these four economies, together with three others, Nigeria, Mexico, and Bangladesh, are home to nearly half the world's unbanked population. So when I hear people come to me and tell me, oh, well, the mining is centralized in China. Yeah, it should be. Because, again, number one, you see a lot of these altcoins that are popping up. They're popping up and being promoted and pumped and dumped in places like China because most Chinese people, as the article is telling you, they don't have adequate banking. So they're screaming for something like this. They also have alternative energy, or they can get energy for much cheaper because they have coal. So it's a reason why mining would be centralized there, the mining aspect of Bitcoin, because they can get energy for cheaper, and they actually need it because they have a repressive regime. They live in a communist country, right? We have adequate banking here, right? We have options. It doesn't matter what our gender is, what religious group we belong to, what the color of our skin is. We can all get bank accounts as long as you didn't do anything shady. You could go get a bank account. And you have options. You got Bank of America, you have Chase, you have Wells Fargo, you have credit unions. I mean, literally, the amount of banking institutions that we have access to in other parts of the world, they don't have that. So now, as I was saying to you before, you have a choice. Do you want a centralized option, like a Fed coin, like a China coin, where the government can track and monitor everything you do and everything you spend. And if you say the wrong thing, like we see here on YouTube, if you say the wrong words, if you talk about a particular group or you don't agree with a particular political opinion, they can literally demonetize you. They can, like they did with Farrakhan, deplatform you because they don't like your speech or they don't like what you stand for. So you may have freedom of speech when it comes from the government, but you don't have freedom of speech when it comes to private corporations. So now start thinking about where we can go with that. Start looking at the trajectory. If, let's say, Facebook can launch LibraCoin, who's to say that they won't be able to mess with your account or remove you because they don't like where you stand politically or the things that you say? So when I'm talking to you about a cryptocurrency, I'm talking to you, what attracts me to Bitcoin is that ability for it to be decentralized. The fact that there's no third party, there's no one like Vitalik behind Ethereum, like there's no leader behind Bitcoin. No one knows who Satoshi Nakamoto is. We don't know if that's just a pseudonym. We don't know if that's a group of people, if it's a female, if it's a male, or if it's a computer. We have no idea. What we do know is that Western civilization's banking system is collapsing. That's what we do know. So now, Alessandro Ambriso, Shadow Man, said, yeah, not a fan of Bitcoin. So what are you a fan of? Are you a fan of the US dollar? That's lost 90% of its purchasing power? Are you a fan of the government being able to tell you when you can and can't access your funds? Tell me, what are you a fan of? Are you a fan of a centralized coin like Ripple where they're literally dumping hundreds of millions of dollars on you? Is the dollar a strong currency? Because they just dumped $6 trillion on you. The dollar is the biggest altcoin I've ever seen. The Fed just dropped $6 trillion on you. And that's not even counting what they're going to do with quantitative easing. That's not even counting what they're going to do with their other programs. They just dropped $1 trillion on you here, $1 trillion on you there. You've lost 90% of your purchasing power. You're talking about people getting rich off of Bitcoin. How many people get rich off the dollar? How many CEOs, how many airline CEOs made millions of dollars and are going to get bailed out in your system? So this is what you have to deal with when you hear people say these things as if the dollar is stable and the dollar's lost 90% of its value. Income inequality has never been higher. Going back to the Gilded Age, we have the greatest income inequality in the history of money off of using your dollar. I want you to think about that. No one's behind Bitcoin. It's decentralized. That's the whole point. It's rules without rulers. It's for people who want to be free, who don't want a person controlling. I don't want anyone behind my money. I want my money. The market is supposed to determine what money is and how valuable money is and isn't. Government, no one should be behind money. No one should be behind money. You don't have to buy a whole Bitcoin at $6,800. You could buy Satoshis. Bitcoin's highly divisible. Right? Just like you have quarters, you have dollars, you have $5, you have $10, you have 20, you have 50, you have 100. It's the same thing with Bitcoin. You don't have to buy a whole Bitcoin. You could buy 50 Satoshis. You could buy 100 Satoshis. You don't need to buy one. Bitcoin is more divisible than the US dollar. You don't have to hold Bitcoin. You don't have to hold Bitcoin to transact in it. So who cares if it crashes? You can hold your currency in a stable coin like Tether and you can transact in Bitcoin. You don't have to hold your money in Bitcoin. So I think that Alexandro, you may need to educate yourself a little bit more before you speak on things that you don't understand. Number one, Bitcoin is a new currency, right? It's only 11 years old. That's number one. Number two, as Bitcoin gains more adoption and the market cap becomes much bigger, you're not going to see those wild fluctuations, which is why I keep trying to tell you guys this over and over and over again, right? When you take a step back, you understand you're dealing with a market cap of $120 billion. You're dealing with a tiny asset class. It's easy for the price to swing and fluctuate crazy. That's the investment aspect of it. If you just want to use Bitcoin to transact and send someone money, and they can convert it into any currency they want to, you're just transacting. It works just fine, right? For those of us who want to hold Bitcoin, right, we're holding hard money because we believe that it's going to be worth more in the future than it is today. If you hold US dollars, we know that your dollar is going to be worth less in the future than it is today. This is the difference between time preference and money, right? Real money, hard money, you want to hold on to it. You don't want to spend it because you understand, like gold, for example, it's going to be worth more money in the future. So it makes you think twice before you spend it because it actually has value. When you have fiat dollars, that loses value, you don't value money, which is, as a society, we don't value money, which is why we spend it so freely. See, when you understand money and what makes money money, you begin to realize this is why we have an overconsumption and we live in this hyperconsumption society, and we keep having these booms and busts that keep happening much more frequently because we have a society that's all about debt and consumption. So if you hold dollars, you're going to lose money. If I hold my Bitcoin, I'm going to make money. Every year, Bitcoin has finished higher than the previous year. Right? Every year, if you go year to date, you look at the low to the high, every year from low to high, Bitcoin's always made higher lows and higher highs. Just follow the chart. So, with that being said, let's get back to the presentation, right? So now, going back to what I was saying before about privacy. We are in a cashless society. You have a choice as to what society you want to live in. Do you want to live in a society, a cashless society where everything is going to be tracked and monitored? Or do you want to live in a society where you're going to have some privacy? Going back to Bitcoin, what I was saying to you before, I showed you this before. If you go to the data, let's go back. So this is known as a block explorer, right? Remember we were talking about a ledger, right? Bitcoin is basically just a ledger. It's a decentralized ledger where you can see all of the transactions that are actually happening. So I don't have to guess who received what, where did it go. I can actually track it and I can see it. Now, let's update this. So 3 minutes ago, a block was created, right? This is the hash of the block. So I can click on here and I can go down and I can see all of the addresses. I don't know who is behind these addresses. I don't know who's behind these addresses. I just know that these people received Bitcoin and I can see which addresses have received it. So this is open source technology, right? It's an open distributed ledger. There's no secrecy. There's no hiding. There's no secret bailouts. You can't just print more of it, right? It's fixed. It's a fixed asset. And that's one of the things that gives it value, right? It gives it value because the fact of it's hard money. It's a hard cap. In order for you to mine Bitcoin, you have to spend electricity. So remember when I was showing you the fractional reserve lending, the Fed literally just printed $6 trillion out of thin air. There's nothing stopping the Fed from printing another 6 trillion. There's nothing stopping the Fed from printing another $20 trillion. And then we don't know what happens in the shadow banking system. We don't know who's being bailed out. This is money that can be verified and tracked. I don't have to guess what's happening. I know what's happening with Bitcoin. And that's the most important thing about decentralization. You don't have to trust, you can verify. Now, when you start thinking about gold, I've said this before, we are never going to go back to a gold standard. That doesn't mean that gold isn't valuable. I have a huge investment in gold and silver. What I'm saying to you is that gold has failed as far as being money, right? Money that people can use in a modern society. I should correct myself. It hasn't failed as it's failed as being money in a modern society. People love everything we do is digital. You're not going to, if you want to buy a house, you're not walking in there with, 200 bars of gold, 100 bars of gold, 50 bars of gold. It's too heavy. Everything is digital now. The next thing with gold is it's easy to centralize it because you have to store it somewhere. If you want to send money to a person in China, if you live in America and you want to send money to someone in China, you have to transport that gold. That means that you have to put that gold on a plane, on a boat, and get it there. How long will it take to get there? A day? Day and a half? 2 days? Understand with Bitcoin, all I need is your address. All I need is your address. No paperwork. I don't have to go to a bank. I don't have to sit down. I can send you $15 million. And once the network and the miners go and they start confirming that that's a legit transaction, it's in your wallet. So Alice can send Bob, as I said to you before, you could be all the way in Nigeria and I could be here in America and I can send you $2,000, $3,000 in the middle of the night. I don't have to go wire the money. I don't have to go wait for settlement. I don't have to fill out any forms. I can send you the money instantaneously. And within 15 to 20 minutes, the money will be in your wallet. Just like that. So now a person said the problem with Bitcoin is that not a lot of stores accept it or have the way to. You don't have to. You can convert Bitcoin into any other currency. It doesn't matter if the store doesn't accept it because you can convert it into a stable coin. You can convert it into the US dollar. You can convert it into the Swedish franc. You can to the British pound. You can convert it. You can convert it into any other currency you want to. That's on you. You don't have to just like, for example, right? You can't walk into a store and buy groceries with a gold bar. You can't walk into a store and buy a car with a gold bar. You have to convert the gold into a currency. See, there's money and then there's currency, right? So if gold is a store of value or Bitcoin is a store of value, you then convert it into whatever currency you need to convert it into. That's it. Whatever currency, whatever. I'm not going to walk into a store with a bunch of silver or gold and say, hey, I want to buy some bread, right? I'm going to convert it into whatever currency I'm at. Just like if I have the dollar, right? I can't use the dollar in other countries. I have to convert the dollar into whatever currency is there. Again, you can't regulate something that's decentralized. You can try, right? You can try to do that. Bitcoin does not take maintenance. It doesn't. It doesn't, and it doesn't go down. So I don't know what CEO Dollar is talking about. The Bitcoin network has never been down. The Bitcoin network has been up and running for 11 years. The Bitcoin network has never been rolled back. The blockchain has never been rolled back at all. So I don't know what CEO Dollar is referring to. So now some people like to talk about money laundering. So I want to cover that real quick because people say, well, people only use Bitcoin to launder money. Well, people use the dollar to launder money. Now listen to what CEO Dollar just said. He says prices go down. Okay. So I know that it's hard for a lot of you to follow this. So you said prices go down. Here we go. This is your dollar. This is your dollar. Is this down? Is this down or is this up? Is this down or is this up? Is this down or is this up? Your dollar has went down 90% of its purchasing power. And that's if you believe the CPI numbers. So your dollar is down. So let's not talk about things going up and going down, because guess what? There's something known as Forex, and your currency fluctuates every day. It goes up and down. Right? Every day it goes up and down. Right? This is your dollar. From 1913 to 2013, it goes up and goes down. Right? Every day your dollar fluctuates, but over time, your dollar has lost 90% of its purchasing power. So that ends the argument about money going down. I don't want to debate about money going down, because all fiat currencies go to zero. All fiat currencies go to zero. There's not been one successful fiat currency in the history of money. Every single fiat currency has went to zero. So that ends that argument. So don't talk to me about Bitcoin going down, because every fiat currency has went to zero in the history of currency. Every currency. Fact. Now it says HSBC to pay 1.9 billion US fine in money laundering case. HSBC PLC agreed to pay a record 1.9 billion in fines to U.S. authorities for allowing itself to be used to launder a river of drug money flowing out of Mexico and banking lapses. Okay? So I want you to think about this. The biggest currency for fraud and money laundering is in Bitcoin, right? Because they want to say that, oh, well, they use Bitcoin to launder money. No, they use the U.S. dollar and U.S. banks to launder money. There's a Netflix special, right? And this is in your face. Netflix documentary re-examines HSBC's $881 million money laundering scandal. Thank you for the donation. Quiet as it's kept. Appreciated. Netflix documentary re-examines HSBC $881 million money laundering scandal. So, as I said before, anything that you can say about Bitcoin, I can point that right back at your currency. We know that the dollar is unstable. We know that the dollar in the fractional reserve system isn't a healthy system. We know that being able to print money out of thin air only further drives income inequality. If I go back and I show you fractional reserve banking, as I've shown you guys earlier, I'll repeat that again. This type of system is immoral. It hurts savers and rewards speculators. And we have to get back to a point where we have hard money. We can no longer live in a society where people can just print money out of thin air. The dollar is not tangible because the dollar is not backed by anything. How can you say the dollar is tangible when you could take $100 and you can turn $100 out of thin air? You can turn it into $446. How can you say that is tangible? It's backed by nothing. Now, don't worry, guys. I'm gonna block these guys because they just want to talk the talk. So I'm gonna block them. I gave them enough time to speak, so they're blocked. They're gone. But I give people a chance to speak, and then I'll block them. And I do this because I want to show you that, number one, I know what I'm talking about. Number two, I can back up what I'm saying. There's 244 of you watching. Please hit that like button. So, I have no problem blocking and removing people, but I do this to show you that these are the kind of conversations that people engage in, right? The United States has been laundering money and drugs through banks for years, going back to the CIA. If you know about COINTELPRO, if you know about how the CIA used to bring drugs into certain communities, and I don't want to get into that whole discussion, you would understand that the U.S. government and the dollar and fractional reserve lending is highly destructive to societies, highly destructive. And you would begin to understand why we need to switch to a better system, a system that's more sustainable, a system that actually benefits people. We need to increase our savings rate. We need to increase our productivity. When you can take $100 and you can turn $100 into $446 out of thin air with just a $100 deposit, that's a problem. That's not a healthy and functioning economy, because it's backed by nothing. And if you understand, the only thing that gave the dollar value was the fact that it's backed by gold. It was backed by gold. That's what gave it value. And then after that, we slowly, through Bretton Woods and then through Nixon taking us off of the gold standard, we unpegged and delinked from the dollar. And that's what happened. What is backing Bitcoin? The same thing that backs all money: confidence. The fact that I'm willing to enter an exchange in it. What backs the US dollar? If everyone woke up today and said they didn't want to use the dollar, they wouldn't have to use it. What backs the dollar is faith, is confidence, the same thing that backs all money. Government doesn't give money value. See, that's what happens. Most people fall for that victim. Fall for that game. They fall victim to that game. Governments, the market is supposed to determine money, right? The market determines what money is. It could be gold. And in some civilizations, they use seashells as money. In other places, they used feathers. In certain African cultures, they used beads. In certain African cultures, they used sticks. They used tally sticks in certain cultures. Money is supposed to be scarce. The problem with some African cultures who used beads is Europeans. See, in certain countries in Africa, the beads were rare. They were scarce. But then the Europeans learned that they could actually print more of these beads and create more of them out of thin air. So they were exchanging, doing business with certain African countries and beads. But the Africans didn't know that they were able to create abundance of the beads, right? They were basically doing fractional reserve lending. And see, this is what happened to using tally sticks or using beads. Like, for example, if you live on a beach and you use seashells as money, it works really well if you live on a beach, right? That's your money supply. But then if a person has another beach near them, they can inflate your money supply. See, you have to be able to have a money supply that's fixed. You can't be able to just inflate the money supply out of thin air or have these price shocks. When the Fed comes in and pumps in $6 trillion, that's not healthy, right? So what made gold money and why it's always been money is because it's hard and it's rare. You can't just print more of it. You can't just find more of it. You have to physically go into the earth to find gold. It's not easy to print more of it. Now, Rockfeeder, he says, I don't think you should block them. You need to hear what other people disagree with you. I heard what they're saying. I heard exactly what they're saying, and I answered their questions. So now at this point, right, Rockfeeder, if I answer your question, you have questions about what I'm saying, and I'm proving to you that what you're saying is wrong. And I say to you, all fiat currencies have went to zero. That's a fact. Gold has been the only money that lasted thousands of years. Gold is money that's lasted thousands of years. And I've proven you wrong. And you tell me that Bitcoin can drop 20%. It also can go up 20%. And then I show you your dollar has lost 90% of its purchasing power. And you still keep commenting. Then I have to block you, because then now you're just disrupting the chat and you're disrupting the live stream and you're not asking informative questions and you're not debating anything of substance. You're debating how you feel. And at that point, then now I can't listen to you anymore. I have to block you because you're just asking questions to disrupt the chat. And that's the point. I gave them well over 10 minutes of my time. So at that point, I block you because you're not being productive to the conversation. So, but money could be anything. The thing about money is that it has to, first of all, money has to have three qualities. Number one, money needs to be able to preserve its purchasing power over time. That's number one. It also needs to be recognized as money, meaning that I can put this in front of you and we can both say, okay, this is a $5 bill, right? So it has to be able to maintain its purchasing power. It has to be able to be spotted as money. And the most important thing is it has to be easy to transact. And see, this is what always made gold a problem, because it's hard to transact in gold, because when you get the big transactions, you're not going to walk around with 5 kilos of gold or 100 kilos of gold. BSV and BCH is garbage. Do you think this is a short-term bull followed by a sell-off? If so, when do you think the sell-off will happen? Guys, I told you I wouldn't be looking to get into the stock market, me personally. And this is not financial advice. I'm just telling you what I think. I would not be touching any stocks until about Dow 16,000, Dow 17,000, maybe 17,000 and a half. I believe that we have to take another leg down. And just to show you what I mean, I'll pull up a chart for you so you can see what I'm talking about. I'll pull up a chart for you guys. Give me 1 second. Let's pull up not the NASDAQ. Let's look at the S&P. I'll pull up a chart for you right now. Where's a chart at? Full. And let's flip this over. Give me 1 second. I'm going to flip this over for you guys. So very rarely do you see markets. I've never seen a market go straight down like this and go straight back up. I don't. In order for markets to, I'm not into technical analysis, but there are some people who believe in technical analysis. They believe in support and resistance. I'm not a technical analyst by any stretch of the imagination. I'm more into, I like to look at the volume about what's coming in and what's coming out, looking at the bids and the offers, because I'm a day trader, right? I'm not a long-term investor in stocks except for precious metal stocks, but I don't really like the stock game. That's not my thing. I like futures because I get more leverage, but that's a topic for a later video. Very rarely do you see the market just go down and not touch levels again, right? Price has to touch levels multiple times for it to be support, and it has to touch price multiple times for it to be resistance. Like you can see up here, right? If you just look at this, it tried to break above, it came down, tried to break above, it came down, touched it a third time, and then came down, and then finally it broke out. And then resistance became support. And I'll draw a line to show you what I'm talking about, because I know you're probably like, what the hell is he talking about? All right? So you can see price came up in here in this region and it sold off, right? And then it came up and then it sold off. And then it came up and then it sold off. And then we had a fake breakout. And see, this is what gets a lot of people in trouble, right? It breaks above, everybody gets long. This is dumb money, right? Dumb money says, oh, look, it's breaking out, it's breaking out. And then it comes back, stops you out. Because this is what the HFTs do. The high frequency traders, they love this. They play this game all day long. Because there's some people, they trade off of these lines, these imaginary lines, right? And these imaginary lines mean nothing. So you come up here, you sell off, you come up here, you sell off, you come up here, then you break out, you test this level again, and then you go up. And you can see this, just pull up any chart, any time frame. If you're a day trader, if you're a weekly trader, a swing trader, investor, because this is just emotion, right? Stock markets is made up of a people's emotion. Right? People are greedy. Somebody wants to be bullish and greedy. Someone's fearful and they're selling. But very rarely do you see a market sell off like this and go straight back up. It's going to have to come down here and test these lows again. It's going to have to. So me, if I was trading this, I would be looking for 2,700, 2,800, and I would be looking to go short. That's what I would be looking to do. I would be looking to fade any rallies in this market. I would be fading them. I would not be looking to go long. I would be looking to fade any rally in this market, because what you have to understand is, remember, if you go back to my previous videos, I told you guys we are 2 weeks behind, 2 to 3 weeks behind China and Italy, right? So everything that you see happening in South Korea, that you see happening in Japan, happening as far as the pandemic thing is concerned, right? We're behind that. So now when you take a step back and you understand that, there's going to be more information that's going to come out over the next weeks. We just had a 3 million print on unemployment claims. I mean, that's insane. And that's just the tip of the iceberg. Unemployment's going to spike. More and more people are going to lose their jobs. And the Fed's going to have to print. It's going to take more than $6 trillion to get this bubble inflated again. Right? And when you understand that, it's going to probably take another 10 trillion. And then understand an election's coming up. Politicians never like to let a good crisis go to waste. So you got to worry about the Democrats and them trying to position themselves. They're talking about Cuomo now maybe trying to become the next Democratic nomination. Biden doesn't sound like he knows anything. He sounds like he's getting old of age, right? So there's so many things coming down the pipe that there's no way that I'm going to believe that this market is going to turn around from here and go straight back up to 3,400, go back up to 3,000. Again, like I said before, I could be wrong, right? That's markets. That's why it's called risk and reward. You have to know what is it that you want to see, and at what price are you wrong? See, that's guys, I've been trading the market going back to 2000 and maybe I would say 11, 12-ish, maybe even 10. I don't even know the exact time I started trading the markets. When you follow markets, right, it's about risk and reward. Let's say I'm willing to risk 2 units, that's $2, and I'm looking to make $6, right? So I know my risk versus reward. I only need to be right 40% of the time to be profitable. That's what trading's about. Like, no trader's going to be right every time. You're going to take losses. That's his name in the game, right? But if I'm risking less than my reward, I'm good, right? If I'm risking 1 unit or 2 units to make 3, 4, or 5 units, that's risk and reward. So if I'm taking this trade, I'm taking this trade at 2,800, and my stop is at 29, right? Or 3,000. So I'm risking 100 points on the S&P. So if I go short here, let's say I go short at 28 and my stop's at 29, I'm risking 100 points. And again, I would never risk 100 points on the S&P. I'm just talking hypothetical here, right? I'm risking 100 points and I'm looking to get out that trade at 24, 2,300. So I'm looking to make 400 points or 500 points of reward for 100 points of risk, right? That's 5 to 1. My reward is 5, my risk is 1. I'll take that trade every time. I'm taking that trade every time. Because I only have to be right 1 time out of 10 trades. I mean, I only have to be right, what is it? Let me get my words right? So that's 500 units and I'm risking 1. So if you took, 5 trades, that would be 5 losses. Yeah. So I only have to be right 1 out of 6 tries to break even. I'll take that trade all day long. Because it's like flipping a coin, right? Think about it. Trading is all about flipping a coin. A trade can only do 1 or 2 things. It only can go up or go down. That's it, right? It's either it's going to go up or it's going to go down. Well, if you flip a coin, you're only going to get heads or tails. So every trade is 50-50 just based upon statistics. And once you understand that, like, people try to make trading like overcomplicated with all these indicators and all of this different analysis and fundamental analysis and technical analysis. If you're trading, we're not talking about investing, right? We're talking about trading. If you're talking about trading, it's 50-50, right? It's like flipping a coin. It's 50-50. I'm taking that trade every time. Well, you have to understand, I'm not talking about technicals, Mark J, because there's volume. I'm looking at volume and I'm looking at the flow. That's why I'm saying, like, I'm using a generic way of speaking. So I guess you could say that's technicals, but I wouldn't be taking those trades. Like, I don't trade off of technicals. I trade off of order flow. So I'm trading off of like what's really happening in the market as far as supply and demand. I was using technicals for what they're talking about. I don't personally trade technicals. That was my point I was trying to say. Like, I was saying that I was showing him how price touches multiple levels. I would never trade off of that, but I'm just saying, based upon odds, I would take that trade every time. If I'm risking 1 unit to make 5, I'm taking that trade every time. And I was just that was just a hypothetical. I would never just blindly say I'm going short at 2,800 and I'm going to put my stop at 2,900. I would never do that. That's not smart analysis. That's not smart trading. That's not smart money management. Again, I was just putting out an example of Mark J. That's all I was putting out an example. I would never trade off like that. That's just not smart. I was just simply saying that, when you look at the risk versus reward, all of the risk is to the downside. I don't see any reward to the upside. And that's just the reality. With things that are happening in the economy, I don't see a reason why you would want to be trading in that type of fashion. Now, if you're investing, that goes back to the point of, if you believe that we're going to experience inflation, right, then you want to be investing in risk assets, right? So if you believe that the Fed's going to print another 10 trillion, 6 trillion, 5 trillion, then yes, you want to own stocks. And yes, I would be buying now. Like, if I'm an investor and I have a 3 to 5 year window, I'm buying now. That's the reality. That's what I would be doing if you had a 3 to 5 year window. I would be buying now. But then you have to understand, you're buying in the face of, you don't know how much worse this can get. And you don't know how much longer the credit cycle can go. Right, so you have to really start putting those. And again, this is called risk and reward. Some people are going to make big money if the market goes up, and some people are going to make big money if the market goes down. Who knows? The market could just drift and go sideways. We don't know, right? That's what about trading. There's no guarantees in investing. Anyone who tells you that there's a guarantee, they're lying to you. It's all about risk and reward and probabilities. I don't care if you're long term, short term. Whatever you are, like, it's probabilities. You're not going to win in every trade, which is why diversification is important, which is why I like real estate, which is why I like, dividend paying stocks, and which is also why I like, highly speculative assets like Bitcoin. But let's pull up gold. I haven't looked at gold. Let's see what gold's up to. And let's see what gold is doing. Oh my God, look at that. Look at that move in gold. Look at that beautiful thing. Right? And again, this goes back to technical analysis. Again, like I said, I don't trade off of it, but I know people who do. Again, it spent the whole month from October, November, December, was at 3 months. It spent in this range. It came back down and it bounced up again. And look at this. I'm telling you, we're going to see, let's pull this axis down. I believe we're going to see $2,000 gold before the year is over. So I'm happy. I'm heavily invested in gold and gold miners, especially the junior miners. But the junior miners are very volatile. So let's see some more questions. Only guarantee is gold and silver. It's been money for 10,000 years. Agree with you 100%, Loaded Scalper. Would not disagree with you at all. You can never go wrong owning gold. You'll never go broke owning gold. Take some more questions. JMO said Grant Cardone is doing big layoffs. How long before Jay Morrison does layoffs? I don't know. But see, the difference between Grant Cardone and Jay Morrison is that, Grant Cardone's making it known that he's an entrepreneur. He's had to make money, right? Grant Cardone isn't going around and promising people that he's going to stop gentrification and revive the black community. So I don't see anything wrong with laying people off. Like, that's part of the business cycle. People get laid off. There's nothing wrong with that. It's something wrong with when you're selling people this whole Robin Hood, we're going to buy back the block and we're going to stop gentrification. That's when it becomes a problem. That's when it becomes a problem. And I think that's Jay Morrison's biggest problem is going to be that he sold people. I wouldn't say it's affinity fraud because it's not fraud because what he's doing is legal. I would just simply say that he's playing on people's emotions, their anxieties, their fears, and he's selling them things that he just can't deliver on. That's not practical. And I think that that's going to be the biggest problem with the whole, there we go, Johnson Kissinger, false hope. I think that that's the problem. Grant Cardone isn't selling false hope. Like, he's selling you a business, and businesses fail and some succeed. Like, I've had business ventures and I've had investors and we've lost money. I didn't scam them. We just lost money. Like, it's part of business. Like, no business is going back to trading. Every trade is not going to make you money. It's just a reality. It's numbers, right? Like, some trades you're going to make money, but it's about risk and reward. Like, when I'm trading, as long as I understand money management and I understand that I need to get 2 units of reward for every unit of risk, then I don't care. But like, there's no business that you're going to go into that's going to always make money. You will eventually lose money. Your investors need to understand that. But when you're selling people this idea that I do this in real life and that I'm swaggy and I got all of this confidence, you make it, you set yourself up for this type of failure. And that's the problem. That's the problem. Which is why like I'm hesitant about creating a course. I'm hesitant about all of those things because I realize that it attracts certain people who don't understand risk and reward. Right? Like, a lot of people believe that they're going to buy a course and they're going to become rich. A lot of people believe that they're going to watch this DVD or attend this lecture and it's going to change their life. And it just doesn't happen that way. It's hard to deal with people who they don't understand, capital markets. They don't understand capital formation. They don't understand investing. It's hard because you're dealing with a wealthless group of people who just don't know any better and they don't have any business investing. People put in $500, $5,000 to make 8% preferred return. That's, that right there already tells me you lack financial literacy in the highest degree. To the highest degree, if you're going to give somebody $5,000 or $10,000 to potentially make 8%, like, what is that 8% going to do for you, right? That's no real money. So it clearly it shows you that a lot of people, they don't have the proper, financial literacy. But again, that's why they target Vlad. They target the Breakfast Club. Because let's just be honest, those people who watch Vlad and the Breakfast Club, they're not people who are that engaged in economics and finance. They're just not. They're people who they have that hustler flipper mentality. They just don't. So you're dealing with a demographic of people that are wealthless and they just don't understand investing, and that's just the reality. And you have to understand that, and this is why this is going to keep happening. Like when you're dealing with those type of people, you're dealing with people who, let's be honest. I've probably, and I'm not saying this to toot my own horn, but like, how many books I've read, how many businesses I've started and failed in, how many ventures I've participated in. So like, I know what I'm getting into before I get into it. A lot of people don't have no idea about what they're getting into. Business takes time. Right? And the most valuable resource in business is time, because time is going to teach you so many things that you should be doing and shouldn't be doing. It's going to take you 3 to 4 years before you get good at being an entrepreneur. Very few people get it the first time. Very few. Very few people, get it right out the gate. It takes time and development and refining your philosophy and a lot of things that you thought you knew about yourself and thought you knew about life. It takes time to grow and evolve. And, when you got this Jay Morrison standing on the corner, he's standing on the corner in the hood and he's trying to teach people about, like very complex things. And it doesn't work that way. You're not stopping gentrification with $9 million. I've taken 60, $70,000 losses, and I had to go look investors in the face and tell them, hey, we lost. So I try to get people to understand that this is about risk and reward, and you can get yourself in trouble when you jump into things and you don't know what you're doing, and that's one of the problems with a lot of. This is why I created this channel, so that I can give you guidance as far as to which direction to go, but I can't teach you. Right? Only you. Experience is going to be your best teacher. Right? Mentorship is only meant to guide you in a direction. Mentorship is only meant to give you options, and then you have to sift through those options and see if they're meant for you. That's why it's called personal finance. It's personal to you. Gold may be the thing for you. Silver may be the thing for you. Hell, you may figure out a way to trade platinum and forget investing. Real estate may be your key. Affiliate marketing may be your thing. Network marketing may be your thing. YouTube may be your thing. Working a job may be your thing. Investing's not for everyone. Trading's not for everyone. Entrepreneurship's not for everyone. Some people are better working a job, and there's nothing wrong with that. Nothing wrong with working a job. There's nothing wrong with working a job, putting 50% of your savings in a bank account and 50% in your IRA, your 401k, or 50% into your to gold or silver, or 30%, however you want to structure it. There's nothing wrong with that, right? Some people, long-term investing, buy and hold is the best thing for you. And for other people, it's different, being speculative in nature. Like, that's me. I've always been a risk taker. But I've taken a lot of losses. I've slept in my car. I've lost my rent money. I've done dumb things. So I make these videos to get you not to do stupid things. Right? I spend my time doing that. He's trying to teach people about 1,000 ideas when they barely can handle $400. I agree. I agree with you 100%, Garcia Simpson. That's the whole point. Which is why you don't see me on here selling people that you're going to buy the Black Wealth Boot Camp and you're going to get rich. You don't see me on here telling you that you're going to buy Bitcoin and it's going to take away all your problems in life. You don't see me sitting up here saying that, all you have to do is start a business and you're going to build generational wealth. Because I would be lying to you if I said that. That would not be true. Instead, what I do is I encourage planting a seed. I encourage you read a book. I encourage you watch some videos. Go and watch some lectures. I encourage you to take 3 to 4 years on your path of development. Guess what? At 20 years old, if you spend your life building your knowledge base, building assets, you'll be fine. If you spend 20 years sitting on here watching a bunch of people talk to you about all of your problems, but you don't spend any time working on your problems, guess what you'll have in the next 10 years? The same goddamn problems, right? If you spend 10 years listening to people talk to you about the problem and never doing anything about solutions, you'll have the same problem 10 years later, if not worse. See, I don't sell you some dream or fantasy. I sell you reality. What I sell you is, here's some information. Go build on it a little bit more. Let me plant some seeds in your mind. Let you go grow a little bit. But what I'm not going to do is I'm not going to watch documentaries all day long about a person talking about problems. What I'm not going to do is attend a live stream all day long, listen to people talk to me about problems. What I'm not going to do is let people gaslight me all day long and talk to me about that I can't do nothing in my life but sit around and wait for my government to do something for me. That I won't do. Because I know where that's going to get me. Because I know where it got my father. I know where my dad got doing that. My dad sat around all day long listening to street teachers going from the Nation of Islam to Christianity to Malachi York thing. He was in the gods of I forgot what it was called, 5% Nation. I watched that. I watched them sit around all day long and talk about their problems and never do nothing about them. I watched that my whole life. And I told myself I will never do that. If I got breath in my body to do something for myself, I'm going to do it. I will never sit around all day long and let people gaslight me and talk about problems all day long, right? I was 20 years old. I was 25 years old. I was 30 years old. I was a young man that had something in my mind. I had breath in my body. So I went and did something. Because I can go through my family and I can show you plenty of men who all they sat around and talked to me about was the problem all day long, about racism all day long. And guys, I know those things exist. I'm not a fool. I wasn't born yesterday. But I only can focus on what I can control. I only can focus on the things that I can control. I can't sit around all day long worrying about what's going to happen. I have to focus on doing things to make sure things don't happen. Now, granted, you may not like that philosophy. It may not be for you. And that's great. It doesn't have to be for you. Different strokes for different folks. If you want to sit around all day long and watch DVDs and listen to lectures of people talking to you about the problem, great. Me, I'm going to do something about the problem. And guess what? I may fail. I may fail at it. And there's nothing wrong with failing. If I failed before. Guys, I was an athlete. You don't make every shot you take. Sometimes you get blocked. Sometimes you miss. Sometimes you airball. Sometimes you get dunked on. Sometimes you get embarrassed. Some games you miss every shot you take. But then you have those games where you make 10 for 10, you go 20 for 20, you hit a 30-point game, a 40-point game. Right? That's the game I play. Again, like I said, I can't tell everyone what to do. I'm not here for everyone. I'm here to plant a seed in a young man's mind, in a young woman's mind, or even an older person's mind. Because someone planted a seed in my mind. Someone came into my locker room when I was a freshman and put a seed in my mind that changed the way I view life. Someone put a seed in my mind that made me look at the world differently and say I could be more than just a basketball player. Somebody put a seed in my mind and said you're going to college for free, but you're going to school for a career that, only pays $40,000 because the coach only wants you focused on taking classes so you could be eligible. Pressure pipes and makes diamonds. I was taught the dollar was backed by Saudi oil, which is why they bombed, gut, and beheaded any country that defied OPEC prices. There's an aspect of it that is the petrodollar. There's an aspect, but it's not just the dollar. It's many of the G7 countries. So yes, there's an aspect of it that is, but if you look at it, it's no way that the dollar can be fully backed by oil, because look at the price of oil now. Let's pull up a chart, and I'll show you why that's just not plausible at all. Crude oil is trading at $23. There's the petrodollar, right? That the whole purpose of the petrodollar is to force other countries to have to use the dollar. So it's not really that the dollar's backed by it. It forces other countries to have to do business in the dollar. But the dollar's backed by debt. It's backed by you. All money, all currencies are backed by your faith in it. If everyone lost faith in the dollar, it would collapse overnight. And that's what happens to a lot of currencies, is that people believe in them until they lose faith and they break overnight. But there's an aspect of the petrodollar. I mean, I could cover that for you one day if you want to. I can definitely cover that. But remember, the whole purpose of war is spending. War has nothing to do with debt. War has to do with spending. Our entire economy is based off of spending money. What better way to spend money than have this phantom war? Spend billions of dollars on tanks. What do you think? What do you think the whole idea of the war on drugs is? It's a war that you can never win, but it keeps you spending money. The war on terrorism. You can never win a war. You're fighting a war fighting phantom people, but it keeps you spending money because in a Keynesian economy, it's all about spending money. Well, I just showed you only can spend money by going into debt. Right? So understand that this machine, they understand that it's all about debt. And anytime a person tries to create something or an entity that revolves outside of debt, that's what, every time you see a leader who wants to do business outside of the dollar, something happens to them. So it's this whole system is based upon debt. But it's deeper than that, because it engineers society it creates this hyper, what's the word I'm looking for? We have this society that's very hyper. I can't think of the word to say after it, but it's all about like what's next. Like if you notice, a lot of people don't focus on 10 years from now, 15 years from now, right? Everyone's focusing on immediate gratification, right? Reactionary, that's the word. And like we live in this reactionary society where it's like, as soon as I get paid, I have to spend my money. Like as soon as I get paid, I have rent, I have car insurance, I'm going to the play, there's a movie coming out. Like when you have this debt-based economy, it's done like this by design. Because short-sighted is another word, right? It keeps you in this feedback loop where you're not focused on what's important. You can't focus on the next 5 or 10 years because everything is about consume. And, this show's coming on and that show's coming on and this car came out and that car came out and this iPhone and that iPhone, because it's all about consumption. So you get caught up in the day to day, and money is the key factor in that. And so many people miss that. It's called the high time preference. The higher your time preference, the more wealth you're able to build, because you're able to look out much further. And some people, they have a very low time, time preference, and it creates this need for immediate gratification. Where like you'll see people, they'll work 40, 80 hours for $500. Like I've seen young kids do this, and they'll go blow that whole $500 on a pair of sneakers that are going to get creased up and bent up in a matter of, a week or two. I've seen people finance an iPhone and they'll pay $50, $60 a month for the iPhone just for a new one to come out a year later. It keeps you on this hamster wheel, and you can never really unplug, like from the Matrix, because you're working week to week. You're caught up in this, you're caught up in that, and you don't get a chance to really sit down and think. And that's what I'm trying to give to you guys. Not saying that I'm right, not saying that I have all of the answers, but trying to get you to think a little bit deeper, right? To look for things that can fulfill you a little bit more. Really start planning things out and thinking about things, because so many of us, we don't take that time to really think and plan things out. And that goes back to building wealth. Like I had a guy leave me a comment and I said, every 3 to 5 years, just buy a multifamily house. That's it. Every 3 to 5 years. If you start at the age of 20 or 25, every 3 to 5 years, buy a house. Right? But again, we have a society that's created this way. And the people who are social engineering the society, they understand that. They understand the psychology, and because they sat in the laboratory and they've studied you. Like there are people who study. I used to be into marketing, and like it's a reason why they would put the price at $97 or $9.97. Right? Like it's meant to get a reaction out of you, right? It's a reason why, people put the Ferrari in the video. It's the reason why they have the women in the video, because it gets your attention, right? Like it's a way of creating that dopamine in your mind. Like they've studied you. Like it's a science to selling things to you, and certain demographics of people respond to different types of, ways of selling. Like if you go to Jordan Belfort, Jordan Belfort talks about this in the Straight Line Selling. That's the guy from The Wolf of Wall Street. Like, when you start really understanding these things, you start understanding that nothing happens by chance. Like you don't just walk out that house by chance. Like, for example, you may meet a girl or you may meet a guy. Like when he got up that morning and he got dressed and he put on that cologne and he put on that suit, he subliminally doesn't even know that he's doing that because he wants to attract a certain type of attention. So it's not a chance encounter. That was done by design. It just so happened that y'all happened to meet, but that was the intention from the beginning. Like when you go into the store and you don't want to spend money, but they got the phones and stuff on display, it's put there for you to play with it for you to go, damn, I only got $1,000, but then they come to you and say, don't worry about it, you can finance it. It's done by design. You have to learn how to see that and be able to pull yourself from that. And a lot of people can't do it. It becomes hard, and that's what economics is about. It's about studying human behavior. And I'm telling you, man, there are people who sit in laboratories about how many cut scenes to be in a commercial, how to place the product, how the woman's hair should be. Like they have demographics, they have studies, they have test studies. Like they test shit to see, excuse my language, but to really see like what to get you to react. So you have to really be mindful of this. And that goes back to like the dollar. Like, there's aspects of it. Yes, there's the petrodollar aspect of it, but most of it's just perception. All value is driven based upon perception. Right? I like what the Journey of Sin said. Discipline will take you far. Yeah, but in order to have discipline, you must have purpose. Right? You have to have purpose. So you have to be doing things with intention. And that goes back to building wealth. I'm not talking about, guys, when I talk to you, I'm not talking about no yachts. I'm not talking about no jets or no Rolex. When I talk about building wealth, I'm talking about $500,000 when you retire. Right? $750,000 when you retire. And assets, a couple of real estate properties that cash flow. If you got $500,000, $600,000, $700,000 in stock market, in those liquid type assets, and you got 2 or 3 rental properties, you think you're worried about retirement? No. Because you got the cash flow coming in from the real estate. You got whatever type of pension plan you got set up with your job, Social Security, whatever it may be, whatever your retirement is. You got your cash flow, and you got a stock portfolio. You have money. So you got passive income coming in, dividends coming in, cash flow coming in, and you got appreciation coming in from your properties, from your stocks, right? Talking about realistic stuff to you. Not you're going to be some multi-millionaire traveling all over the world. No, talking about over 30 years, if you have discipline and you have intention, you build something. You build something. Or you can look back over 30 or 40 years and say, hey, man, I traveled a lot, I partied a lot, and I lived a good life, right? It's all about what you want. Purpose. And someone else put something up here that caught my attention. DJ MIA says something exactly. Grocery stores and supermarkets are systematically set up to make you spend as much money as possible. Of course. Which is like I said, which is why I try to tell you guys, you have to be a 3-dimensional thinker. In Chronicles of Judah, he talks about that a lot, about having a purpose. I'm not saying not to have no fun. Listen, guys, I like to turn up and party too. I like to go out and I like to spend money and do things just like everyone else. But I also understand that if I'm going into debt to do it, I'm spending future, I'm leveraging my future. So you have to really start thinking about things and just being mindful of things. Because like a lot of people losing their jobs now. And again, guys, I'm not trying to make fun of anyone, and I'm not trying to talk down to anyone. You don't see me panicking right now. You know why I'm not panicking? Because I have a savings account. I have enough money saved up where I can pay all of my bills for the next 6 months, and I don't have to worry. That's just savings. I'm not even talking about investments, gold and silver thing. Like I know for a fact I have enough money I could probably live for the next 2 or 3 years and not have to make another dime. Right? But I try to get you guys to understand. So when I see stuff like this happen, I don't have to make another dime, and I got enough money to pay my bills. I'm good without making another dime. For the next 6 months, I know my bills can be paid. Why? Because I didn't overconsume. I can go out and get a Mercedes-Benz if I want to, a BMW, and have some nice car. Or I can say, you know what? I'm going to get me an affordable car, and that extra $500 that I could be paying for that BMW or that Mercedes Benz, that's going to go in my savings account. See, that's what people do now, right? Adults think about that, having an emergency fund. Right? I tell you guys all the time, there's good debt and there's bad debt. And then I was like, I can leverage my credit cards. Let's say I get to the point where I don't have no cash. I have credit cards that have 0% interest. Right? So I can take money off my credit card at 0% interest if I need be. And I'm saying this to you not to brag. I'm saying this to you so that you can start thinking ahead. Because there's going to be a lot of people who are going to try to, sell you a bunch of fear. Now's not the time to be fearful. Now's the time to start getting your house in order and understanding where you put your attention at, where you put your resources at, is what you should be thinking about. How much money do I have saved? How much do I have invested? Right? That's what people do. The journey since I met a guy who drove a BMW and had 8 roommates. Trust me, I know I have family members. They make $40,000 a year net, but they're driving a $60,000 car. You know how many people I know about like that? They drive a $60,000 car, but they make $40,000 a year. You got to think about things. You have to have intent when you do things and why you're doing things. That's what adults do. Adults plan for their future. Now I get it. Life happens sometimes. You may have a kid, or you may get incarcerated or whatever, or you may lose your job. Life. I get it. Life happens, right? It happens, but at a certain point, you have to start figuring out ways that you can fix things. That's just the reality. But we the carry ones that can point this out though. Keep up with the Jones mentality. Exactly. 100%. And that you see that happen with so many people. They just get so caught up into things. And that's why I said that's why I started this channel, because like I said before, I see so many young people wasting so much of their time, their effort, and their energy and following things that are just not going to be beneficial for them. And I try to stress that to people all the time. And if I can just positively impact 1 or 2 people, then I've done my job. Because trust me, there's been people who have positively impacted me and have put me onto things. And my job is not to give you anything. My job is to plant the seed, and then you have to water it and grow it. And that's the most important thing. Like my mentor, he planted some ideas in my mind, and then I took them and I, went out here and watered that seed. And that's just the reality. And that's what I want to be able to do, is plant ideas in your mind for you to grow and for you to see things. I'm going to do a video on that tomorrow, Taylor. Did you see the FDIC announcement? Yes, I'm going to do a video on that as well, because there's been insurance funds that have failed in the past. So that's going to be tomorrow's topic, the FDIC video, unless something major happens. But that's going to be the video that I'm going to make tomorrow. So, and that's the thing. JB, I don't think there will be pitchforks. So sick of the system. This bailout will only enlarge the wealth gap. I agree. I'm waiting to see the pitchforks come out April 1st. I agree with you. When you realize how many people invest in stocks that pay dividends and start doing it, the change in 5 years can be dramatic. Thank you, Moses Swag. I try to tell the younger girls that have 4 or 5 kids trailing behind them. Yeah, kids cost. Listen, the quickest way to lose money is with children or a bad marriage. Marrying the wrong person or having kids with the wrong person can suck a lot of wealth out of you. Also, can someone said the comment section, people are trying to keep up with the Joneses, and the TV is another weapon that's being used for consumerism. Exactly, and that's why I highlight the fractional reserve banking system, because it's all about debt. And once you understand that, you get why not to make these certain decisions. When you understand how money is created out of debt and money is created out of thin air, you won't make those type of mistakes. I spoke about that earlier. I don't see anything wrong with Grant Cardone reducing staff. If he can't afford the staff, he has to reduce them. there's nothing wrong with what Grant is doing, and I don't want to sound like I don't want to sound like a hypocrite. If Jay Morrison was just doing business and he was just making money, that would be cool, right? But when you're targeting a certain demographic of people and you're giving them false hope and you're selling them things that you know you can't deliver on, and you structure it in a way where it's going to benefit you only, but try to make them seem like it isn't, that's to me, that's the problem. That's the problem. To me, that's the problem. And laying people off. If your business is just at a point where you can't pay the employees, you just can't pay the employees. That's just part of business. I don't see anything wrong with that. If you believe that Grant Cardone is as rich as he claims, that's just you falling for the soup. As soon as I see a person in with a jet, I know they're broke. Like, anytime I see a person flossing with a jet, showing you nice watches and cars, I know they're broke. Like, I know that. I there's some people who live paycheck to paycheck and they're millionaires. Like, most NBA players live paycheck to paycheck. And you may be saying to yourself, how do you do that? Because they may make $5 million, $10 million a month or a year or whatever the case may be, but their bills are bigger than that. They got a few baby mamas, they get divorced, they got mansions, they got their boys they got to take care of. So, when I see Grant Cardone, I already knew what it was. It's again, it goes going back to what we were talking about. Marketing. Right? It's meant to attract a certain type of person. Right? It's meant to attract a certain type of person. Wealth is built over time. That's it. Wealth is built over time. So whenever you see a person marketing that fast lifestyle, buy this course and you're going to get rich, guys, walk away. What I'm showing you is how you're going to build wealth in your life. It's not going to be through some course. It's not going to be through, some investment fund, right? You're going to build wealth by taking it year by year, having realistic goals, putting money in your savings, putting money in your retirement that you have to, steering it towards hard assets or commodities, putting your money in things like water, land, gold, silver, right? Putting your money in things that are real, that are tangible. Buying you one rental property every 3 to 5 years. Like, these are things that you can do in your life to build wealth. If you chase behind the Grant Cardones, the Polites, the Amazon affiliate stuff, I did all of that. I can speak to you from experience. I did all of that Amazon network marketing, affiliate marketing. I did it all. Only a few people really get successful in that. You are just another number, another commission, another sign up. The reality is you need to be focusing on real, tangible things that you can do in your life and focusing on taking care of your personal finances first. No lottery ticket, pie in the sky stuff. And if you do those things, you'll be fine. But like I said before, I may do a video on a Grant situation because I think a lot of people are piling on him just because he's successful, and it's like, that's just part of business. A lot of companies are going to lay people off. Like, you think Grant Cardone, 3 million people lost their jobs. And that's just this week. Trust me, there may be, there's going to be a hell of a lot more people who are going to lose their job. Trust me when I tell you guys, you think Grant's going to be the only one laying people off? Man, listen, you haven't seen nothing yet. I'm telling you that there are going to be millions of people that are going to lose their job. That's going to lose their job, Now, Jay Morrison, on the other end, number one, Jay Morrison has allegedly stolen money from people. And that makes it even more, worse. That makes it worse. And like I said before, when you target poor black people like that's just not, that's why, like I said, I stay away from that type of wording and, saying I'm gonna buy back the block and I'm gonna help black people do this and all that. When you do that, you open yourself up for that type of criticism because you're going after vulnerable people who, listen, man, they can't afford to take that L. And you know he couldn't make money in a good market. At least Grant Cardone made his investors money. Like, see, that's another thing too, right? And I know somebody gonna say, oh, you're kissing up the white daddy as usual. But like, the S&P was up 20%. The S&P was up 20% last year, and Jay Morrison lost money. I want you to think about that. Like, the S&P was up 20% and he lost money. Grant Cardone made his investors money. Jay Morrison lost money 2 years in a row, but paid himself. And he didn't pay himself like a small amount of money. He already for this year, he paid himself $500,000. Right? He paid himself $500,000 to lose you money. And so he's on pace to almost pay himself $1 million for the year, and he lost money. Excuse me. Like that's the problem with Jay Morrison. Like he sold you that he's rich in real life. And yes, you are rich in real life when you're charging, high fees to underperform and underdeliver. And you're going after vulnerable people who should have enough sense to know 8% is not enough. Mr. J, that's what I really want to say, Mr. J, but I'm not going to say it. I'm trying to be politically correct, and I don't want to say that. But yeah, if you believed in what Jay Morrison was selling, you deserve to get what you got. It's the same thing. You see Polite now, he's trying to sell stock markets and talk about quantitative ease. And it's just like, you can tell when a person doesn't know what they're talking about. Like, I could listen to Polite speak when he said, oh, the Fed's I believe the Fed's going to do another quantitative ease. I'm just looking at him like, you have no idea what quantitative easing is. Like, it's just like what it does. And it's just embarrassing to see people do this. Like right now, everyone's a virus expert now. Everyone knows about biology now, right? Everyone can tell you about where this came from, and they can break it down. And it's just like, like every week they're an expert in something different. It's like they're an expert in something different. They know all about these different diseases, but they can't cure any of them, right? Like, If you had the cure for diabetes, why have to buy your course? Like, think about this. You're money motivated, right? Because you're selling a course or you're selling a lecture. So that tells me that your incentive is to make money. Okay. Don't you think you can make more money by finding the cure or making the cure public than you could by selling lectures and DVDs? Right? Think about it. If you could cure something, why would you sell lectures when you can just sell the cure? Because the cure is going to be worth more money than the lecture. The lecture, you may get 100 people to watch the lecture. With the cure, you can make billions. So when I see people trying to tell me that they can break down all of this knowledge, I say to any person with a brain says that doesn't make sense. Because if you could cure something, you would just market the cure and not the lecture, because the cure is going to make you more money than the lecture. So, it's just like, you see things and you just go like, yo, man, it doesn't make sense. Like it doesn't make sense at all. Like it just does it, like this. And like Mr. J said, yeah, they can't do it in pharmaceutical, because if they do the pharmaceutical, then the Illuminati's going to come get them. It's like, like, come on, they're not going to get you for making a lecture about it, but they'll come get you if you make the cure about it. Come on, that doesn't make any sense, man. But it's just like, it's the stuff you see, man. It's just the stuff you see. It's just like, yo, man. It's like, and people, like I said, and it frustrates me when I see people make videos about me and they call me a scammer. and they say like, I'm scamming people for donations. Like when I hear that, I just go, I can't believe like these people can get millions. Like they were selling $500 status corrections. They were selling you $500 status corrections. They were selling you plagiarized books. And if I get a $5 donation, I am scamming people. I like this man got $9 million to lose money. I want you to think about that. You gave this man $9 million, Jay Morrison, to manage your fund, to lose money. And if I get a $5 or $10 donation, I am scamming people. Like I sit there sometimes and I just say to myself, like, wow, like, you know, like Mr. J said, it's a lot of things I want to say, but I tried to be very, very, very politically correct before I say something, you know. I try to be politically correct. But, you know, DJ MIA, I know he's watching me. I'm glad you said that, because when I saw the video, I said, yo, he's watching my videos. When you said that, I said, yo, he's watching my video. When I was watching a video with Polite, I said, yo, he's watching my videos. I knew it. Like, it's funny you said that, because I was sitting there, because someone hit me up on Instagram and they sent me the video of him talking about DRIP, dividends reinvested, something like that. And I said, yo, he tried to talk about quantitative easing. I said, yo, he's watching my videos. You know, and I was just like, but people are going to think that he's smarter than me because he can, you know, talk about, you know, the ancestors, and he's going to get on here and he's going to cry about Nipsey Hussle and stuff like that. So, you know, guys, I understand how the business goes. When you're a truth teller, you'll always be broke. Right? When you tell the truth, you're going to always be broke. It's not a lot of money in telling the truth, right? The money's in the lie, right? That's where the money's at. If you lie, you'll make a lot of money. If you steal, you'll make a lot of money. But like telling the truth, trying to do things by the book, honestly, you're not going to make a lot of money. You'll make a living, but you're not going to make a lot of money. So you just won't. I've come to that realization years ago when I used to be in network marketing and affiliate marketing. I couldn't lie to people and sell them courses and stuff like that. That's why I stopped doing network marketing and stuff, because it's just like you have to lie to people to get them in. Because the reality is, like, you just, you know, most people are not going to be able to duplicate what you do. So, and that's just the reality. When you have a business that's based upon people producing what you produce, they're just not going to do it. Which is why that's what originally got me into day trading and trading. I wanted to be involved in a business where I didn't have to depend on people. Right? I hated depending on people, because I could never get people to duplicate me, right? And it used to frustrate me. Like, I used to spend so many hours giving them books, mentoring them. Like, I used to go do presentations for them, and I could just never get people. I could never sign up enough people in the company to keep up with the amount of people that were quitting, right? So for every one person I would sign up, 2 people were quitting. Like, you only have 90 days, maybe 120 days to keep somebody on auto ship before they quit. So, like, every time I was signing people up, you know, 2 more were quitting. And that was just the reality. That's why I said that's what got me into day trading. Because I said I need a business that I can make money and I don't have to depend on people. Right? Because if you have to depend on people, you're going to be out of it. And that's just the reality. I'm not selling my futures. I'm not selling my future system. My system's worth millions of dollars, Lotus Scalper. I wouldn't do that. I'll check out some of your content though, Lotus Scalper. Let's see what you got on your channel. But I don't want to do any courses, man. I was thinking about doing a cryptocurrency course. I've changed my mind on that too. People are crazy. Oh man, put some videos up, Lotus Scalper. Let me see what you got going on. I'll come check it out. I don't want to do no courses. I was thinking about doing a crypto course. I'm like, Next thing you know, they'll be calling me a scammer. People will be doing 3-hour lives on me. You know, the next thing you know, they'll be making 3-hour lives on me, calling me a scammer, talking about I'm trying to steal people's money. So I was just like, nah, I'm staying away from that. Next thing you know, they'll be calling me a scammer. Yeah, I want to be like Rick. But Taylor, it's funny you said that because that's my philosophy, right? I'm glad you said that because that's what I'm trying to get to. If you want to know my end game, right? My end game is that I want to be able to have a daily show like this where I sit up here and I talk about markets, I talk about certain business topics for about an hour to an hour and a half, and then I'll spend 30 to 45 minutes answering your questions and talking to you about different things. I like Richard Hart's platform. I like how Richard Hart does things. So if you know, like one thing about me, I'm very transparent. Like I don't try to hide things from you guys what I'm trying to do. Like I think that's going to be really, really good. You know, and I probably like on Wednesdays I'll probably like day trade live. I'll probably like Wednesday or Thursday will be like a day I'll trade live. I'm waiting for some regulatory things to finish up before I really get into the trading stuff heavy because I don't want to be sued in any type of way. So I'm trying to take care of that stuff because you can be sued by not by individuals but by the CFTC or the SEC if you're promoting certain things while you have certain credentials. So I want to take care of that before I really start doing the trading stuff. But I want to have like a daily show around like 7:30 p.m. every day, and then like I said, one day do a live trading, maybe trade for like an hour or 2 hours, and do that. So that's what I want to do. But with that being said, guys, I'm gonna end it here. We're coming up on 2.5 hours. Thank you so much for tuning in, guys. Please hit the like button, share the video, subscribe, hit the notification bell, join my mailing list so that I can email you on any updates. Follow me on Instagram. And also, if you want to financially support the content, a link to my PayPal and my Cash App is in the description below. Have a great night, guys. See you tomorrow.